Hello and a very warm welcome to all the viewers of 3.0 TV. This is Manoj Dara. So, Shamik, we are talking about gold-backed stablecoins, and that is the core competent area. We are talking about among the future of 2022 of stablecoins. So, my next question to Shamik is it still not common practice for major stablecoins to provide guaranteed timelines, since Navin was also talking about conversion, guaranteed timelines for redemption into fiat currency or alternative assets?
Yeah, I think, well, here, this is the largest challenge in this space, is that it's all about liquidity, right? Liquidity, liquidity, liquidity. This is every problem with the stablecoin. You know, at the end of the day, a true stablecoin, as we see it, gold-backed or US dollar-backed, has to have that gold or those dollars sitting somewhere unencumbered. Investing that money, even in a graded bond portfolio, is still invested. Bottom line, there's risk at any level. So being unencumbered backed stablecoin is the number one most important thing. And that poses a challenge now, especially for the gold business. Now, if you're in dollar-backed stablecoin, it's easy. You can move your dollars and give people liquidity to ultimately redeem their dollars. But even that, most of the dollars in a US dollar stablecoin is invested into the US Treasury, exactly. Which is still invested, whatever you want to call it. The unencumbered means unencumbered. That's the end of it. And so I think the challenge is to give the market a unencumbered stablecoin, which is backed by dollars or it's backed by gold. Then it becomes a challenge of liquidity. When you want to go and redeem your gold, can you get that gold into these countries? What if you're in a country that's difficult to import gold from? Then you have the second problem. If you want to give them dollars, you have to go and sell the gold from the vaults, take the dollars and then give it to them. It's not instant redeemability into dollars. So that becomes a challenge. And so, then you start thinking, okay, well, maybe I'll get lines of credits against my gold so I can give liquidity that way. And all of it ends up becoming a liquidity problem and challenge. And I think that the stablecoin market needs to grow in a very organized fashion alongside with their liquidity, so that when the market wants to convert it into another asset class, those establishment relationships are established already, and organically they can move seamlessly in and out of those asset class without having to sell the underlying product, which is backing these stablecoins. And this is going to be the challenge going forward, is to manage liquidity. And as you saw and mentioned before, a lot of these algorithmic stablecoins and all these different types have tried to come out, which try and solve that problem, ultimately, because they don't have to have any underlying assets behind it. They can, but then you pay the price for that, right? When it goes wrong. And when your mathematics is off and you get a run on the bank, you now get the Luna problem, which was the issue there. So, that's the way I see this market going. I see it going very much in terms of true unencumbered assets behind the stablecoin, which is the only true safe haven on the blockchain. And I think for companies, it will be a challenge now to organically grow their market share and provide liquidity for their market.
So, Oliver, the challenge is to grow organically. What's your view on that? How do you see this? There are a lot of challenges which Shamik has actually highlighted. What's your view on this?
Yes, right. So actually, we have already taken on this challenge, and we have also released our own stablecoins, which are, for example, the USDG, EURG, and Singapore Dollar G, SDGG. So we have, for all major currencies, stablecoins prepared, and our stablecoins are not fancy, they are very simple, and they just work with a one-to-one fiat balance on our accounts. Yet they are not as big as the others, but we are pushing forwards to the adoption. And I think, when we created these stablecoins, the idea was not to create a business with the stablecoins, but just to ensure the safety of our customers. Because when we see at the giants in stablecoins, and we still think that one day this is going to crash, we want to at least give an alternative to our customers to have a stablecoin which will not just one day evaporate into hot air. This is the reason why we built our stablecoins. And yes, I think Shamik is right. The only thing which you can do to keep them safe is just keep the fiat balance one-to-one. It's not going to be lent out. It's not going to be used for anything. It's just going to sit there. And redeemability is every day. So whatever amount of coins you have of our stable coins, you can transfer them to any of our Globiance platform in the US, in South America, in Europe, in Asia, and you can just cash out the fiat balance behind.
Fantastic, and that's what Naveen, both the gentlemen have already mentioned, is cash and cash equivalent is the reserve is more important than anything else. What's your view on that?
From a stablecoin perspective, as what Shamik and Oliver mentioned, we are running on a very thin line of trust and confidence. And every time we get above that line, something like FTX or Luna happens, and again, you put it back.
Exactly.
So at this point in time, it is very important topic which comes off is of the proof of reserve. So many of the stablecoin initially listed used to operate like a bank where everybody has money in their account. But if all of us, a sudden, all of the people decide to come and withdraw the money, the bank says, sorry, we don't have that. Because they have already lent it or they have invested in be it A-grade security or anything of that sort, but it is still invested. So this is the area where the stablecoin importance comes into picture, that the asset has to be there. The proof of reserve is one of the very important element for building the trust for people. So this is one of the area when we wanted to launch Comtech Gold, we wanted to try to have it backed by something which is internationally accepted. So Comtech Gold is backed by standard 1 kg bar, which is internationally traded across the globe. And we did not go in for something like a gold reserve where you say that, okay, I have some reserve lying, my gold is lying in a bigger reserve. That's not the case for us. So that's where we decided that we have a 1:1 backing. And the backing is also by standardized gold bars, which is internationally accepted.
All right.
So when the investor comes back and says, okay, I need my underlying asset, it's available for him.
Fantastic. I mean, since we are talking about the way forward, my next question to Shamak is, in the latest development which we have seen, the announcement has come on from Iran and Russia. They have announced their plan to cooperate towards launching gold-backed stable coins. Will this alter the global view towards the entire currency market? And what is the view on this announcement?
I think that the direction they're going is the direction that every 50 odd years has happened for as long as history, right? The depegging and pegging of gold has always happened historically as soon as people stop trusting currencies and so on and so forth. And so they're merely going and going through the same cycle as they were sort of before.
Okay.
And I think that it's a great move in a sense of inflation and building trust, et cetera, but ultimately it's still another form of asset which is controlled by the government. They can also turn off their taps, they can also freeze the accounts, they can also do everything else that the average everyday user would be worried about. And again, all of this announcement is very much an announcement that is going to have very limited uses in the beginning. They'll be used only for certain trades with certain free zones. It's not for really the everyday guy. It's to trade in certain products, maybe oil, maybe whatever, from a government level, from an institutional level. I don't think it will help kind of the everyday person. And you look at that's one way Russia and Iran have been doing. But you look at China. China came into Saudi Arabia and said, "Hey guys, please accept Chinese yuan, and we will make sure that we'll give you goods and services for your yuan back in big data and so on and so forth. And if we can't, you can take your yuan and convert it to gold on the Shanghai Stock Exchange." And it's just another form of giving people who are trading with these countries the ability to offload their reserves of another country's currency without going into dollars. And
exactly,
I think that this is just going to happen more and more as trade imbalances and the risk of embargoes take place with this sort of economic warfare that's happening with the dollar.
Oliver, your quick take on the Iran and the Russia announcement.
Mm-hmm. Yeah, I think actually it's a logical step to happen. So when the SWIFT system is blocking them out, then of course you need to find another way. Blockchain is the logical way forward, and gold-backed ensures that all parties perceive the same value without having a major currency like before taking place in all these transactions. So I think, yes, it was to be expected.
It was expected. Naveen, what is your view? Were you expecting this move?
See, it was expected, as what Shamik said, that over years, over history, we have seen people trying to move away from dollar. It started also with the people saying that, okay, now we are going to start accepting euros. Then it started saying that Iran is going to sell their products in their own currency, and they started accepting bilateral trade. So we are going back to the olden days of a barter system or bilateral trades. But is currency only required for government, or is it something required for you and me as retail people to use it? So currently, whatever announcements are coming more at a government level. But can end investor or end customers use the new products or use the new currency? That is what is important. So till the time that adaptability is not pushed down to the end investor or the end customer, the impact is limited to the government.
Perfect. So we move to our next segment, which is an investor awareness segment for our retail investors. So my next question to Shamik is, how would you explain these intriguing developments that are for the benefit of laymen who are keen to know about stablecoins? So if you can just sum up in very, very short, how can you explain the entire segment to them, and how should they approach?
So I think that as the stablecoin market increases, I think ultimately and as trust is built, and as we discussed earlier in terms of making sure that the underlying asset, whatever that may be and whatever you choose it to be, is safe. Ultimately, for the everyday person sitting in a village in India without a bank account can now open up their MetaMask wallet and they can hold a stablecoin and they feel safe that their bank account is on their phone. And I think ultimately that's the end user. And then having the ability to, go and pay and send money to their family in another country with ease using stablecoin and being of trust that stablecoin is holding its value is sort of the summary of where I see this going from a retail perspective. But just one other kind of point which becomes challenging, I think, is actually we can get into that more when we get into the gold side. But yeah, that's a summary of that from a retail point.
So Oliver, how can you explain this stablecoin sector for our viewers?
Mm-hmm. So actually, very simple, the stablecoin turns you into being your own bank. And this is also something which we are pushing with our apps to the clients globally that don't have a bank account now, because we are very interested in helping the underbanked and unbanked. So we are seeing that our app actually is a solution for everyone on this planet. They can have their Globiance accounts and they can hold the stable coins of their pegged to the major currency of their choice. May it be the US dollar, may it be GBP or a Swiss franc, whatever they want. We have the stable coins and they can hold and they can send them to their family 24/7. They don't need to wait until the bank opens. They don't need to wait and to open a bank account for their family members to receive it. So actually by installing the app and going to the 5 minutes KYC procedure, everyone has become his own bank and he can do his payments 24/7. And I think this is very important for the people. And this is how we strive to connect the world.
So Naveen, this is actually a very, very, good intention, what Oliver has highlighted. And we are talking about I am the bank and the ease of banking. What's your view on that?
Yeah, so as what Oliver highlighted, the importance of the stable coin is the usability of it and the power which it allows an investor to hold actual assets in a dematerialized form kind of thing. So be it gold, be it any other underlying asset or something. So important from a customer point of view is the liquidity and what is the value it's able to get out of it. So having it in my wallet doesn't give me any benefit if I cannot use it. So that trust has to come in where, as what Shamik had pointed out earlier, liquidity. If I'm able to convert my stable coin into any other asset whenever I want it, that is the actual power of stablecoin. And this is when people would be happy to hold stablecoin in their asset with the trust that anytime I want it, I will be able to use it.
That's all there is in today's special episode in Digitally Unplugged. This is Manoj Dara signing off. But keep watching 3.0 TV for more such interesting interviews and updates from the global guests. Thank you.